You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time to rock out with the Option Block, everyone's favorite. I hope it's your favorite. It's certainly my favorite bi-weekly source of all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, and hopefully, some fun sprinkled in there as well. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so around here, maybe we're biased, the Options Insider Radio Network. Got a great cast of characters helping me come at you today, including, I'm very happy to say, the return of the last emperor, the Fidelity hot seat, back rolling and active again after their hurricane-imposed hiatus. Mr. Last Emperor, welcome back to the program. Glad you withstood the might there of Dorian, sir.
Thank you so much, guys. It's great to be back, really. I want to say that, this whole ordeal last week about Dorian kind of reminded me of what we see in the markets with volatility from time to time. The storm is sitting just off our coast, absolutely devastating the Bahamas at Cat 5 for days. You're watching videos and pictures that are coming onto social networks and things of that nature. And it's scary, right? And everyone, has that heightened kind of level of awareness all of a sudden. Offices are closed for 2.5 days. Areas are evacuated. And then all of a sudden, the storm slows down and takes a little bit of a bound east, and things calm down very quickly, and it turns out to be kind of a nothing burger. So, very interesting, but we've had a few of these situations in the volatility markets this year, and I think, it kind of reminded me of making sure that we're keeping an eye on the big picture. But resembled in many ways, at least in my mind, what investors have to deal with on a day-to-day basis these days.
And so you're obviously down there in the Jacksonville office, which is why you guys couldn't come on the show last week. Really quickly, walk our listeners through, what is the process there? Obviously, you guys had to shut down because for a while there, I was in Orlando. I was hearing about it as well. They were saying it was going to potentially make landfall, be this devastating Category 5 plus superstorm, and it was just, the nightmare scenario. So it clearly makes sense that you guys would close. So I'd imagine you guys shifted the brunt of the call load and everything else on the active trader strategy desk up to maybe the guys in New Hampshire and elsewhere. Is that what was going on there?
That's exactly right. The guys in Merrimack, guys in Dallas were picking up the slack. So, but they fared all right, I think. Without us, we tend to come back and get right into back into our seats and take care of our clients pretty promptly. So just a few days, I don't think was that big of an effect, but we certainly appreciate them stepping up for us while we were out.
Yeah, I'm sure they loved you just dumping all the calls on them all week. But the guys are back up. See if you want, you can now call the go to fidelity.com/options or reach out to the coaching URL there and call up the desk, and you can ask for the last emperor again. All of you who are waiting with bated breath to do just that. And maybe after you do that, maybe you say to yourself, maybe I want to get someone to hold my hand through these options markets and coach me and mentor me, in which case maybe you'll reach out to this guy over there in the land of the pit who's way north up the coast, so he should be safe from all hurricanes. Mr. Rock Lobster from OptionPit.com. Mr. Rock Lobster, how go things? Are you bracing for the remnants of this storm coming your way?
To be honest, Mark, it's Maine. Nothing really happens up here. And I think we're the only state that doesn't have natural disasters. We have nor'easters, and we have, moose that run in the highway, but we don't really have it's been a little bit cloudy, and that's about it. So, and I think our summer just ended like last weekend. It's totally over. Labor Day, literally, like they turned the switch off.
Yeah, we have that in Chicago too. The switch just flips, and now everyone's wearing long pants and jackets again. So.
Yeah, my daughter's wearing a stocking cap. And it's 65 degrees, but it's not 80 anymore. So
I think you just created the new marketing slogan for Maine there, though. It's Maine. Nothing ever really happens here. There you go. Come to Maine. Also, the options mecca of the U.S. And maybe a mecca, obviously Chicago is the global mecca for options, so it's hard to beat that. But outside of that, maybe number 2 behind Chicago and Illinois at least is a little small hamlet we know here as St. Charles, where we are joined by Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the show. To you as well, sir.
Always happy to be here, but not happy about that number 2 label. We're going to work on that.
I think St. Charles may have a way to go. There's many great things about St. Charles. Usurping Chicago as the options mecca may have a way to go. Water Gardens, you guys got it in spades. Meanwhile, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's dance. Let's get into it here. What's trading today? And it's kind of a bit of a shrug to start the week here. After last week, we saw kind of a bit of we saw some downturns earlier in the week, then a pronounced turnaround, just the whisper, the hint of the potential for talks on the trade war was enough to send us through the stratosphere several sessions in a row, 1% plus days going on out there in the space. Dogs and cats, everyone was happy. It was a joyous kumbaya time. Starting off the week this week, not quite as kumbaya-esque. Dow up slightly, about 1/10%. S&P off about 1/10%. NASDAQ about 1/3% or so in the red. That's pretty much the only one that has any real direction or momentum to it. Everything else is kind of listless gold. Actually, oil's getting a bit of a lift, up about almost a handle and a half out there in WTI, threatening the 58 handle. So obviously all this talk back and forth about Iran giving it a little bit of a lift, which is interesting because you've listened to TWIFO, for a while now that the market was just shrugging off any concerns out of the Middle East. They didn't care. It was all about the weakness of global demand was just crushing everything. Maybe that story is starting to shift. Speaking of shifting, our old friend VIX Cash is shifting a little bit again today, up about 0.81, which puts it exactly at 15.81 coming in. So is that the 15 handle coming into today? Actually, it was about 15 handle. And then now it's up to about 15.8. So getting a little bit of a lift back in. Let's go back around the horn. Let's start. He hasn't been on in a little bit for their storm-imposed purposes. So let's get the last emperor on here first. Mr. Last Emperor, sir. What's been lighting up your tape in your storm-imposed exile, sir?
Yeah, pretty amazing that we saw that 14 handle in the VIX last week. That was quite incredible. I guess, the trade talks in October are better than trade talks in September. So for now, all is good. What is lighting up the tape here at Fidelity? Top three names. A couple names that we actually don't frequently see. AT&T being the number one. Right now, split pretty much even, 52% buys, 48% sells. But a tremendous amount, I would say, comparatively speaking to everything else, the amount of orders is definitely trumping everything else in AT&T. An interesting story there, obviously. Some news circulating about the fact that an activist investor sent over a letter to the board demanding a few things. And it looks like the board responded pretty quickly. The idea is, right, there will be some changes to be made, some changes that potentially, could make the company more profitable in the future. But I, always look at these things from a long, intermediate, and short-term view. And so, today the stock is up 2.5%. That is a very big move for AT&T. It generally doesn't tend to move by these sorts of magnitudes. If you look at the implied volatility in there, on the low end it was roughly around 14.5. On the high end was around 40, and that was back in December. But right now IV30 is at 20% even. So this 2.5% move to the upside, especially with the early morning gains when it was up close to 4, was a pretty outsized move. On the longer term, if I look at a 5-year weekly chart here, AT&T has been, underperforming, I would say, right? An underwhelming stock, even though it has, a dividend yield that trumps the S&P's yield by over 4%. I think on my last check was around 5.6. Annualized, obviously, the lower the price goes, the higher that yield is. But I'm not looking at a total return chart here, just looking at a price chart that is adjusted for dividends. In over 5 years, it has been underperforming substantially. It actually just with the move today got itself a little bit higher than up 5% over the past 5 years, while the S&P is up close to 50%. But the picture changes. It wasn't, the stock has been in the downtrend, and this year has kind of flipped on its trend. The downtrend was broken. That was probably broken, in my view, if you draw that long-term downtrend at some point during the month of April. And since then, especially most recently, maybe you could call it, people are looking at it as a safe haven asset. I am not sure, but it is outperforming the S&P by a decent amount year over year. AT&T is up around 16.5 over the past 3 months versus the S&P, an outperformance of close to 14%. If you think about what's been going on in the market, since kind of the beginning of August, I guess maybe some of these, safe haven, high yielding names have gotten a little bit more love. Now, stock is up today. I think the options are reflecting, right, the repositioning of probably some investors. 275,000 contracts traded today, 9-day average volume of around 128,000. So it's already doing double the volume. I see that some October 18th, some OCT monthlies are pretty active. It makes sense to me because, we are about 11 days or so out from this September expiration. So, people are probably starting to roll out to the further month, starting to find some interest in those Octobers there. I'm curious to see if it the eye of the Sauron picked that one up. But nonetheless, doesn't come up very frequently and is definitely active on the board today. Second one was ROKU, and I know that I've talked about this stock on the show before. Fidelity traders continue to trade this name. Today, definitely leaning to the buy side, and that has been the case for the most recent past. It feels like every time I look at it, it tends to be leaning to the buy side. 57% buys, 43% sells. Stock is down 2.6%, but that's not really the story. I remember coming on the show and talking about ROKU right after they reported earnings, and they had a huge outsized move to the upside on that earnings report, and then we were kind of chatting about the fact that it's been trading outside of the 2 standard deviation Bollinger Band for 4 or 5 sessions, and it was up like 47% in a matter of 4 or 5 days. That was back in the middle of August, and I remember we were chatting with Mark, and Mark was like, "Hey, kind of feels a little ahead of its skis, a little overheated," and it came back in. It came back in by around 11%. Stabilized for 3 or 4 days and then continued on to its uptrend. So since that day of our last discussion of ROKU, the stock is up another 30.5%, currently trading at 165 even. Stock is down today, and it was interesting because I saw that the SunTrust analyst that was bearish on it the whole time upgraded or raised the price target from 63 to 160, reiterating the hold recommendation. So I guess they kind of missed out on about 100 points worth of move here in the stock. I'm not sure, right, what the sentiment is about. Didn't really read into the details, but the stock continues to be a pretty crazy performer. Trading volume in the options market today outpaces the average as well. 136,000 contracts almost traded to around 98,000 average. A lot of September action there. September 13th, I'm seeing. So basically, this Friday's expiration, a decent amount of paper. So we'll probably look at that a little bit closer. That one is continuing to be on my watch list on a daily basis. Considering the fact that it's been traded by Fidelity customers and it's not a huge market cap name. The third one is a frequent flyer, Apple, up around 90 basis points right as of this moment. Fidelity customers continue to lean to the sell side here, 60% sells, 40% buys. It feels like that has also been the case, even though Apple has had a pretty good run over the past couple of weeks on the back of the news, that the China issue could potentially be resolved. So needless to say, from the bottom that it carved out in August, which was August 5th, stock is up right now, trading at 214.50. It's up around 12%. And if you think about the market capitalization of this company, 12% is a tremendous amount of value. The options markets, right now trade at 332,000 contracts, 445,000 roughly on average over the past 90 days. So I assume that it's probably going to surpass the average as well. Even though the markets are relatively quiet, traders are seeming to be engaged. And those, again, the October 18th expirations of the aughts going out to the front month, once September is gone, is probably going to be the most active for the next few days. At least my anticipation makes sense. Investors are starting to roll their positions over. That kind of sums it up for us here.
Got some regular stalwarts, some regular staples in your top, as well as a few surprises there. Good old AT&T. Don't see that on the top too often, as well as ROKU. That's been kind of an interesting name to watch of late. People thought it was kind of dying. Then now streaming is the new future, so maybe ROKU getting a little bit of lift from that. All sorts of interesting stuff going on. Speaking of interesting stuff going on, let's go on out to a land it's quiet. It's calm. It's a place where you go to get away from interesting things so you can relax and get ready for the day. And that's, of course, St. Charles. Uncle Mike, sir, in the land where people go to escape. What is lighting up your tape today, sir?
All sorts of things, and by no means is it quiet here. It's exciting because there's block parties. There's people jamming the streets to get to every restaurant to listen to the option block. We're by no means quiet today during noon on Monday and noon on Thursday. There's just nothing but pure excitement here in the land of St. Charles. What's catching my eye right now is just the fact that we actually had an up market in the futures overnight, and then as soon as cash started trading today, we've come down. So with that, by coming down, I should say back to even, if that makes any sense, from where we were last Friday. So I think that tells me right now, at least in the markets in general, that there's not a reason at this stage for markets to go higher or to go lower for that matter. Because if there was a reason, then we'd obviously be lower. But we stopped. We stopped right back at break even. Shorter term markets that I like are ones to where if we start out either break even on the day for the first hour and then we come down and then we flatten out throughout the day, I typically tend to like those markets. And this would be a market that I would like, but I'm going to reserve judgment on that for another 2 hours to see what the next 2 hours brings right before the close. Silver's recovering slightly. Well, it was actually up till a minute or so ago. It's back. That's at about even. Silver had a rough week last week for the silver bulls out there, but it still is up significantly over the course of the last few weeks. But overall, in terms of what I'm looking at here as to what's lighting up my tape, just going down the list of everything with which I look at, the only thing that's really making any decent move at this stage would be financials. XLF is up over 1% on the day. So we do have that. Apple is up $1, but that's really not a big deal for Apple. But that's pretty much it right now. It's market seat appears to be going back to a wait-and-see type of mode.
Mr. Rock Lobster, when it's wait-and-see markets, you know who's not waiting and seeing? It's the crazies in your pit chat. They're slinging, they're wheeling, they're dealing. So what's lighting up their tape over there in these wait-and-see markets for everybody else?
Well, what is I think I like the Konstantin talk on AT&T.
By the way, I think I actually hear crickets, so maybe it is that quiet in me. I actually do hear crickets behind you. So.
You know, those actually are crickets, and I can close my office window, but it's
that's how boring it is. The crickets are out in the middle of the day.
The crickets are out, and they're talking, they're chirping.
That's how exciting it is. The crickets are getting into it.
Exciting it is. So. As from that, you know, that's interesting that AT&T, somebody finally has decided that the stock hasn't been doing anything for a long time. And, you know, as much as I'd like the news in it, I thought a lot of these high dividend paying stocks, I think you could have a strategy around them because I think the market's going to search for yield and either we go higher or everybody freaks out. And I think that yield can buy options. So, it's a strategy I had in AT&T. I had just some leftover stock and puts in it. So it's not much has changed, but I think there's a lot of stocks like that where they're high dividend yields. The vol was very low not very long ago. So it's kind of a funky strategy, but I like buying strangles and then buying the stock. And it gives you sort of, you know, it creates some, maybe a little more juice on the upside, but it stops you out on the downside. And dividends help pay for some of the premium if, you know, nothing really moves. And you have the put protection against the stock. So when the vol's low enough in a high dividend paying stock, it can be a very interesting thing to do. From a VIX point of view, weird. I'd say the market action is relatively weird. Fed cutting, not cutting, who knows what's going on. You know, every time we get close to that 3,000 level, you know, my rule right now is until there's a trade deal, we're not going to break 3,000. It won't be a sustainable break. Every time it goes up there, figure out a way to fade it. I just think that's how it is. I don't know how long it will last. But that's what we have. I mean, you only get hit in the head so many times. And then you realize, that's what happens. So I don't think that's going to change. I think the market, the real test from a VIX point of view is, we traded 15 VIX this morning pretty easily. It looked like it was going to kind of break a little lower, and then literally the vol got bid in the first 3 minutes of the day. As far as I could tell, there was a huge turnaround just in the market for all the puts and VIX and everything like that, calls, everything just flip-flopped really within the first 20 minutes of the day. And that was it. And that was the bottom for vol. So it looked like that was going to happen, but now we're sort of sitting and waiting again. So as usual, we're a tweet away, or I think a munching away. But for now, I think that's what we have today. Now SPX is just sitting around doing nothing. So I think that's what we've got. I don't think it's going to change a whole lot. We've got the Fed next week, so we seem to be a market. Excuse me. Just waiting for the next news in the news cycle, and that's it. There's not a lot more else to say than that. I think the low, if we traded 15 today, I think 15 to maybe 14.5 is probably possible this week, if nothing, if SPX doesn't move. But it feels like the market really is expecting 25 basis point cut, and that's what that's what they want. They want to keep getting cuts until this trade war is done. And then I think after the trade war is over, everybody will be happy that the rates go up again. That feels like the way it's playing out, and I don't think that's going to change.
What will hopefully change is the sound of those crickets, because it makes me sound like you're coming to us from a swamp in the middle of the bayou while you're regaling us with volatility. So that was a fun one. Let's see what else is lighting up our market here. We heard what the Fidelity folks are slinging. Let's see what the rest of you are up to coming into showtime. As you probably would imagine on this kind of middling day, VIX doing not quite half its ADV, a little bit less than that, about 234 coming into showtime. ADV has come off quite a bit. If you listen to vol views, it's off a couple 100,000 contracts. So things are getting light out there again, at least towards the tail end even though things have been moving. It's interesting. Markets have been moving. We have seen volatility. It's not a lot of volume in the volatility instruments, which is kind of interesting. So about 523,000 is the ADV right now out there in VIX land. So well shy of the 730-odd thousand, I believe it was, not too long ago. And SPY coming in, closing in on 1 million contracts as of right about this part of the show. 3.2 is the ADV out there. SPX about 700,000, the ADV about 1.4 million. The Qs about 170,000, the ADV a little bit shy of 700K. And the Russell, aka IWM, doing about 270,000, the ADV 402. In terms of what's lighting it up, we just pulled these, so these are as of a few seconds ago. Let's see the top 10 lighting it up. Let's see how it jives with what you Fidelity folks are trading. Number 10, GE, 112,000 contracts on the tape. That's pretty light for a top 10 listing. Number 9, Facebook, $114. Number 8, Roku. You guys loving it at Fidelity? Loving it across the board apparently today as well. 135,000 contracts on the tape. Number 7, Microsoft, 139,000. Number 6, AMD, a perennial stalwart here, usually in the top 3. Now down to number 6, actually, 141,000. Number 5, the old Widowmaker, Netflix, $158 on the tape today. Number 4, Snap, 178,000 contracts. Number 3, the aforementioned AT&T, 282,000. Numero dos here, Apple, 330. Number 1 with a bullet this week, or I should say today, really, because it is trumping even Apple. It is Bank of America with 380,000 contracts on the tape. It's like the most biased flow is coming at the hands of Snap. 80% of that 178,000 contracts coming on the call side of the ledger. Speaking of calls and puts and all that fun analysis, let's do it. It's time for a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, everybody. It's that time. It's time for the odd block. Going to do another fun kind of live read one. These are ones where Andrew and I really haven't even seen these until pretty much right now. So we're kind of going to parse them live for you, which is always fun. A little bit of live theater for you guys. Let's kick it off here. This, I believe, some of the companies in this holding company are not new, but this name, I believe, is new to the odd block. This is Tailored Brands, Inc., ticker symbol TLRD. This is a U.S.-based retail holding company wait for it, Mr. Rock Lobster, guess who's in the group of companies that are within this holding company? Guess which one is? It's an old odd block, infamous one. Guess who they own?
The Men's Warehouse?
Yes, Men's Warehouse, one of the most infamous of our odd block names, a trade we roundly mocked, which turned out to just print money. So yes, Men's Warehouse included. They also own Joseph A. Banks and a few other men's retail clothing type of venues. Trading today a whopping $6, $6.03, actually up half a buck, so nearly 10%. So a nice little pop here for Tailored Brands. I'm not sure if they had earnings or what the deal is here, but they're moving. This is the name. Let's look back at the past year, see what's up here. They're trading well north of where they are right now a year ago, nearly 4x. They were trading $23.50 back last September. They got up to their 52-week high right around that time of 28, nearly $29. And then they pretty much, looks like their earnings got clipped back in early December. They were trading 23 again, then they sold off down to 13. And that was kind of, looks like it was the beginning of a long, slow decline for them down to pretty much where they are right now. Well, their 52-week low is actually about 4.25, which was not too long ago. And then they've been on a little bit of a rebound ever since, again, up from 4.25 up to 6 over the past month and change. So a nice little run up here for Tailored Brands. Maybe we're going to see some call love to keep this going. Oh, nope. It's completely the opposite, Mr. Rock Lobster. No call love. Why would we expect call love when a name is about to pop? Nope. It's a $6 name. Guess what people are trading? They're trading $7 puts. 12,000 of the SEP $7 puts going up for $1.70. These are near the offer. This is opening over there on the Phillies. This is not a roll. It is worth noting, though, it's a bit of a put palooza going on out there today. We got a total of over 22,000 contracts going up just on the SEP 7 put strike alone. So a ton. 12,000 was just kind of the first blush. Another 10,000 piling in after that. All of that volume opening here. Worth noting, they do have earnings in a couple of days on 9/11, an inauspicious day to have earnings, of course. And then also worth noting today, the 6 puts also active for, let's see, they were about 9,000 and change. So I guess I'll have to check and see those 6 puts if those are indeed opening or closing. Because your first blush when you see this, Mr. Rock Lobster, is, hey, it's a roll, right? But if it is, they're rolling up, which would be fascinating. I guess it wouldn't be that surprising given today's pop. But an interesting move, lots of puts, a put palooza, 8,200 of the SEP, 7 puts also going up today, a 7,400 of the AAPL 6 puts. So someone wants some puts today, Mr. Rock Lobster. What the heck's up in Tailored Brands?
I'm actually trying to figure this out myself. This is quite a thing. It looks like, too, from the pricing that they're buying the puts as well.
It does appear to be that way, yes.
Activist manager, I'm trying to look and see if there's some stock. So this is one of those, I love these kind of weird value plays with options because anytime you can build a lot of leverage in an option trade, even though the stock, it might only be $6, I like those, it's like Weight Watchers, it was the same type of trade where it was really high and then they sold it to nothing. And then, all of a sudden the market does have a little bit of memory that stocks can move, over, like a 3 to 6 month time frame. I'm not really much of a day trader. But here, they're buying a lot of these puts into the rally, and I want to look and see if they're buying stock with. The company pays, it looks like a 72-cent dividend. They paid 72 cents for the last, pretty solidly, the last 2 or 3 years. So, I'm looking at that and I go, I don't know if there's enough in that. I mean, buying a put with the dividend, they could be buying puts in stock to try to buy what I'd call like a synthetic call, possibly, because those 7 calls. Anyway, that could be a way to juice the call because the divvy is the 11th, it looks like. Well, that's earnings. The dividend is the 16th. So it's possible like they buy stock, they buy puts, they try to create the synthetic and get a free call if they own the stock or bought the stock. So not an easy one to figure out. And you're right, they did roll to the 6 put in October. And I'm just trying to get a little bit of a sense of it. It looks like they bought SEP and sold OC. They're like line in the sand at the 6 level. That's what that appears to me. But the SEP 7 puts are a total head scratcher on that volume. All I know, somebody paid $175 and they're offered at $155 right now. So
I'm looking at the stock too. I don't see massive blocks of stock. The biggest block is a 27,000 lot. That's not enough to cover all this. So yeah, I agree with you. It makes more sense puts in stock. I like it better that way. Otherwise, it's a bit of a head scratcher to see a name that is so cheap already. And usually if you see a big run like this, you expect to see call love piling in like crazy. And instead we're seeing pretty much exactly the opposite, which is weird. So you know what happens when it's really weird on the odd block to begin with? We put it in the to be watched category. We're going to come back and see what the heck's up with all of these freaking puts. Put Palooza in a $6 name. Hopefully the Viceroy. I know he listens. I hope he's not listening to this one because he will be deeply offended. People buying puts for a $6 name. That's pretty rich though. What do you say? A 75-cent dividend on a $6 stock? Wow.
Yeah, I'm like, this is what I love about the op block. Sometimes you get these gems, and I don't necessarily do what the paper does. I kind of look at it, and, all right, see if there's a good kind of expected value type of trade. But yeah, there's a huge dividend. So, when there's this much action, our nose starts to go, maybe something's not right. Maybe they're going to cut the dividend because earnings are coming out. Somebody knows something. I mean, there's pretty high vol in this thing.
That's clearly a stock where the board and the CEO have a lot of shares. And they're like, you know what? We're going to pay ourselves a pretty nice dividend. Yeah, it's almost 1/6 of the stock. Who cares? Let's just keep paying.
Yeah, so in either they make money, and I guess it's I don't know why the stock is trading at such a discount. They had a bad quarter, maybe trying to right the ship. They're expecting bigger earnings. It's just, there's a reason why it's so cheap, but the market could be totally wrong in the short term. So I think they did have a couple of surprise quarters there. But again, it doesn't look like they don't make enough money to pay the dividend. But a very interesting, if I'm looking at it, I like the idea of that roll. You buy, it looks like they want to buy the SEP, looking at that roll, like the SEP OX 6 puts. I mean, they're rolling almost for even money on that. So they're not getting a lot.
They're not rolling out that far. If they are that, I guess it looks like they could be concerned about the earnings. Obviously, that's coming up in a couple of days because they're not going out to Jan or Dece or even anything like that. It's very near term paper. This kind of reminds me of back in the days, Bush number 2 administration, and he had Charles Schwab on his panel of economic advisors. And he asked, "What can I do for economic stimulus?" And Charles Schwab's like, "You could cut that dividend tax." And meanwhile, he makes pretty much all of his money on dividends. So this one just brings that to mind. Interesting one. We're going to keep that in the to be watched category. You guys might want to check that one out as well. A lot of interesting head scratching put paper. That's why we like to do them live because it's kind of fun rather than looking at them ahead of time and then cheating. What fun is that? Even while what's going on? That's a name that a lot of you think is fun. Not my cup of tea. I'm not a big crafty guy, but I can appreciate the value of it and what you guys can get from it. This is, of course, Etsy. This is the crafty online company. Ticker symbol Etsy, ETSY, trading right now about $49.50, pretty close to it. Up about $1.50 today, or nearly 3%. So good run here for Etsy. A year ago, they were trading not that far from where they are right now, about $47.20 or so. So about $2.50 shy, a little bit less than that of where they are right now. They got down to, looks like in the nadir of the market. Actually, no, their nadir came back in October of last year when they hit about $38, and they kind of bounced off that up to 57.5. Then they sold off again, and they rallied again back in March up to 71, almost pretty much 73. That's their high for the year, 73.34. And they kind of hung around in that range for a while until August, where then I'm guessing earnings maybe clipped their wings a little bit because they sold off from 68 down to 54 in about a session. So that looks like that has all the telltale signs of a bit of an earnings clip there, and they've been kind of trending lower ever since, down to where they're right now, right around 40. They got down to about 48, and then they bounced again to where they are now, 49.5. So let's see, and all that up and down translates into some size puts today, but maybe not the way we were just talking about. The other way, these puts 8,203 of the Etsy OC 40 puts, so these are pretty decently out of the money puts, going up for 35 cents. This is opening on also on the Philly, I believe, and earnings are on the 6th, so there are no earnings in this. Mr. Rock Lobster just has all the whiff of your favorite trade, sir, the line in the sand puts. What do you think of these Etsy OC 40 puts, sir?
It definitely is smelling kind of line in the sandy, isn't it?
It stinks of it. It reeks of it, sir.
It does reek of it. It's another one. This is one of those, another internet stock, like 3-4 years ago, it was like $12. Even 3 years ago, it was nothing. Then everybody loved it, and it went, how far to go? It got almost like $70, right? So earnings took it down a peg. I think, when was the last time it has seen like $40? 2-3 years ago? I'm going back. I mean, it hasn't seen $40 since, the battle days of October 2018. So almost 2 years ago. So I can see how this is line in the sand puts. Not quite 1%, 40 cents a contract. But not terrible, to be honest. And if you wanted to take delivery, so I guess this is a reasonable put sale to, scoop up some stock.
Let's see if our last name is reasonable here. We're going to go on to Rent-A-Center. It's a name we haven't talked about in a long time. Ticker symbol RCII, a.k.a. the place you want to go to spend $10,000 to rent a TV for a year and a half. I joke, listeners, if you're a Rent-A-Center fan out there. They're trading today about $25.50, nearly up. A good day for them as well, kind of keeping the movement trend alive. Or up 70 cents or nearly 3%. This is the name that's had quite the upturn over the past year. A year ago, they were trading about 14.75, and then they kind of had a little pop back in December up to nearly 17. Then they rallied some more by March up to about 21 and change, and then shot up again up to about 26.5 in May. Their 52-week high was 28.25. They got down to, in the nadir of the market there in Christmas Eve, they got down to nearly a little bit shy of $12, actually, $11.98. So they pretty much doubled since that Christmas Eve debacle. They're trading 25.5 right now. Let's see what's lighting it up. Oh, this is bucking the trend here. We got some call love after all this put palooza's going on here. Got some call love. It was the OC 27s. So near term, near out of the money calls going up for 38 cents, couple of cents out of the off the offer. These were 30 cents at 40 coming out. Earnings are on the 4th of November, so no earnings in this bad boy. Mr. Rock Lobster, we can bring it home on this. Looks like kind of old school odd block trade. We got a little bit of a run here of late in the stock. Someone deciding they want to get in, get a little bit of a pop, buy in some near term out of the money calls here in Rent-A-Center, sir.
Is this a recession play? Okay, people aren't going to buy stuff anymore; they're going to rent it.
So apparently, the recession is hitting by October expiration, sir.
I guess so. It's one of these. It's a reasonable call purchase, but they're looking for the stock to do something it just hasn't done in a long time, which is kind of break out above 27. So. Let's just call this one the price is right on the speculation, I guess. It's odd that you sell Etsy puts for a 1% return. How much you want to spend that the stock is going to just blow out on the upside. This is another one, though. They pay a pretty decent dividend. It just upped it to a quarter. I wonder how long that's going to last, but that's not a small dividend on a $25 stock either. So it would be interesting to see how this one works its way out, because our last earnings are November. So, this is what, post-trade war bullish activity? But the price is right, and at least you have a little time. But it's still going to be a tough one.
We have a little time left in the show. That means let's get rolling with our Monday edition of the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
Welcome to the Strategy Block. Threw me off last week because we did one on Thursday, and that's not our usual day. Our usual day is, of course, today, Monday, and we got the Last Emperor back, only fitting that he would hold down court here. Mr. Last Emperor, I'm guessing your clients got a bit of a decent problem on their hands right now. You know, the market's been in mostly rally mode, at least of late. So chances are they're coming in, they're loading up on some upside trades, and maybe they're working out maybe a little bit quicker than they planned. So what do you do when these folks call up, sir, with these first world type of problems?
Yeah, guys, and I'm curious, in your experience, what you generally tend to do as well. But we've been getting quite a few questions on this. I would speak for myself and for the clients that are in my book. This definitely has been the case. I mean, we generally think through a strategy from the risk perspective first, which is absolutely the right thing to do. If you focus on risk first, profit second, you kind of make a plan for what to do when things don't go the way you were expecting them to, or don't go as planned, right? So, what about a situation when things do actually work out, and let's say that you bought some calls and the market cooperated and went a lot higher and went a lot higher quickly? Well, we do want to make sure we think through the positive side, or the profit side of the trade as well. We want to think through it. It definitely is a first-rate problem. There's no question about that. If you made money quicker than expected, quickly, and you weren't expecting to make it as quickly as you did, it's actually a good thing. You're counting dollars. With the decent rally over the past couple of weeks, we've definitely been getting some questions on this because folks are facing all of a sudden this dilemma. Well, what I generally say to my clients is you got to go back to your original outlook and the reasons why you picked the particular strike and the particular expiration that you did when you placed the trade. And then you have to start thinking about what has changed. So what changed from the technical picture of that particular trade? Reality is that your position is most likely very different today than it was when you originally put it on. And what I mean by that is your exposures are different. So your delta directional exposure is most likely different. Your theta exposure or exposure to your time decaying is going to be different. And your volatility exposure, the vega, most likely has changed as well. In a case of a long call, let's say that you bought an at-the-money or slightly out-of-the-money call, and now it's in the money or deep in the money. First things first, and this is something that I ask clients once I've heard their side out. Ask yourself a question that helps me resolve some of these demons and biases that we might be focusing on when we see fast profits, is if you didn't have that position today, would you place the same trade? And if you did place the trade, if you didn't like the trade that you had as a brand new position, what sort of a trade would you place? So decide on what your outlook is from this moment on, in terms of your direction, in terms of your implied volatility analysis, So effectively, you're kind of starting from scratch. You're thinking about your original trade when you were thinking about risk first, profit second. Now you're at a point where you've obviously picked the appropriate strategy, the market cooperated, and now you're continuing to think about risk first, profit second, or greater profit maybe second. So I would recommend looking at a chart, to assess the trend direction, the momentum of that particular underlying, maybe some visible overhead resistance levels. Plot it all out. You may decide to, reduce your directional exposure, reduce your deltas, as we like to say, by maybe, taking all or some of that position off, depending on where you are. You might consider rolling up the strike to decrease that delta exposure. Of course, rolling up a strike changes your thetas and vegas as well. You might also consider, rolling up and out. Right? So just depending on your current outlook on the underlying and where it is, where it has come from is very important. Right? If it's gotten up to the current level in price terms very quickly, it might potentially be stretched. So you're, again, thinking about, your original outlook, and in light of new information, how is your current outlook, fitting into that parameter. I would say that you may look at the remaining time value, for example. If you're dealing with an in-the-money option, what do we know about in-the-money or deep-in-the-money options? Well, they have a lot of intrinsic value. So some or a portion of that extrinsic value is going to be obviously affecting you. And remember that implied volatility, or the market's expectations of future movement in the underlying, only affect that extrinsic or time value piece. So you might decide that you're looking at the upside resistance levels, and you might actually sell an upside call at that resistance level, turning it into a vertical spread to offset your theta and vega exposure and decreasing some of the delta. Possibilities are really endless in my view, but the appropriate decision can only be reached, again, by assessing the risk first, going back to the original trade. Think about it as if you are putting on a brand new trade with your outlook on the underlying that you're currently dealing with. Remember that those profits that came quickly could also kind of disappear quickly. Options positions are never the same every single day, every single minute of the day. They change, so we have to keep that greater profit perspective second and risk first, and approach it from the same way as if you would if you were placing a brand new trade. So that would be kind of my guidance to the clients. I've been speaking to quite a few, and again, I want to reiterate that it's a great problem to have. I mean, congratulations, you made the right decision, you picked the right strategy, you got paid. What are you going to do next is going to be dependent on what your outlook is on the same parameters that you're making an outlook decision on when you are placing a trade originally.
All right, well said, sir. Now it's time for us to pretty much put it all together with a combo of around the block, as well as a little bit of what's coming down the pike for us here on the old show as well. There we go. A little bit of music to help us do just that. We've been gassing on. It's been a fun one today. Quiet day in the market. We still had a lot going on the show. Let's go back around the horn. Let's start with Uncle Mike, sir. Let's do a combo. What are you watching until we gather here together on Thursday? And if folks are intrigued, they want to learn more, where should they go? What should they do, sir? He broke up there a little bit, listeners. So, of course, stcharleswealth.com is the place you want to go to learn more, kick the tires, and light the fires. Maybe you want someone else to watch the markets on quiet days like today, so you can go off and do something else. You can hang out with your kids. You can do your job. You can take a vacation. Whatever it is you want to do, Uncle Mike's there to help you. stcharleswealth.com. Let's go back out to the Rock Lobster. Mr. Lobster, sir, what are you watching until Thursday? And if folks are intrigued, they want to learn more from the land of the pit, where should they go? What should they do?
Okay, go to optionpit.com. Mark is doing a webinar on Wednesday. I think it's 8 Central Time. So it might be a little late for you. I'm usually in bed by then, but Mark, of course, he's a crazy guy, so he's up. So butterflies, how to trade them, how to use them. It'll be a great webinar. Check it out.
All right, and last but not least, Mr. Last Emperor. Now you guys are back and in fine fettle after the hurricane here. If folks want to check out what's cooking in Fidelity Options Land, maybe they want to call you up to ask you some of these questions yourselves. Where should they go? What should they do?
Fidelity.com/options. You can apply for options trading right there from the website, of course, open an account. If you are already a Fidelity client, just give your regular service team a call, 1-800-FIDELITY, and request an appointment with the strategy desk. You can definitely ask for me directly by name. It would be a pleasure to speak with you one-on-one. What we're watching, of course, for the remainder of the week is some of the key technical areas and levels of the S&P 500. What is volatility going to do between now and Friday? I'm watching the PPI, Producer Price Index data that's coming out on Wednesday, and then the CPI, or the inflation data, on Thursday. I think that is going to give us slight additional hints of what the Fed might potentially do. So again, all eyes on the economic data. In terms of the market moving news, it seems like everything has gone a little quiet here. So we're in wait and see mode, and that is going to do it for us.
And that is going to do it here for the option block as well. But if you're saying, hey, I need some more in my life, I'm not done talking about these here derivatives yet, and maybe you want to talk about some more exotic, some more esoteric things on the derivatives front, we'll be back in about an hour to talk all things crypto here, a little bit of crypto derivatives breakdown. So lots been going on. We were traveling and dodging hurricanes for the last few weeks, so crypto rundown was kind of on hiatus, but it's back. A lot of movement out there, a lot of volatility, a lot of action, maybe even rumors of an ETF, all sorts of fun stuff going on. We'll be back here, so come back. If you're listening live, come back, take a break, relax, get a coffee, get some lunch. We'll be back in exactly 58 minutes to break all that down. Otherwise, we'll see you back here next time for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.